Bitcoin surpassing $100,000 a token last night for the first time ever, also at a record. I do want to bring in a markets guest, Chris Vecchio. He's the head of futures and Forex at Tastylive. Chris, thank you so much for joining. And what do you make of this market?
Good to see you again, Kristen. I think it's been some time since I last talked with you on Cheddar. In any event, as we enter this month of December, the market clearly is in a celebratory mood. A lot of the issues that were plaguing indecision in recent months, the Fed's path of rate cuts and who would win the election, are now in the rearview mirror. The question heading into the last few weeks of this year is how much further can we run up from here? And the fact of the matter is that market participants still may be too bearish. The recent AAII investor sentiment survey showed that bears outnumbered bulls for the first time since April. Historically, when we've seen swings in this AAII bull-bear spread over a 3-month window like we just saw, it typically coincides with a market low, which is obviously not where we are right now, but it does underscore the fact that there still may be some legs to the bull through the end of 2024.
I do want to drill in on the Fed interest rate policy because you bring up a good point, Chris. Yes, markets by and large, I think a 75% chance at least that traders are betting that the Fed will cut rates again in December in 2 weeks' time by another quarter percentage point. But it's getting less likely, according to trader bets, that we see a rate cut in January. How does the recent landscape and comments just yesterday by the Fed Chair Jerome Powell set us up for the rate path in 2025?
Well, we really need to go back to August when we had that slightly weaker than expected non-farm payrolls report that stirred up all of the recession fears. When the Federal Reserve cuts rates by 50 basis points in September, they're doing so under the guise that the labor market's starting to crack. But the reality of the situation is, as we saw with today's jobless claims data, the labor market's still in pretty good shape. We have a 4 handle on the unemployment rate. Inflation is in the 2s. And top-line GDP, according to the Atlanta Fed GDP Now growth model, is sitting right around 3%. The economy is performing much better than the Fed expected at this point in time. So the lack of rate cuts that are priced in is not necessarily a hawkish shift by the Fed. It's an acknowledgement that we just don't need lower rates at this point in time. That hasn't been a problem for stocks all year long. The market enjoys a growing economy with expanding corporate profits.
Yeah, I think that's a really good point, right? Because we've seen a 2-year bull market plus. Now, of course, the bottom was in October of 2022, and we did see stocks continue to rise, of course, back on the back of solid economic data and still high rates. Chris, I want to get your take on Bitcoin. It is the topic of conversation, surpassing $100,000 a token. What do you make of that token?
This has been quite the run since the election, and I see a lot of enthusiasm around people saying now is the time to get in at 100K. Those voices really weren't saying that it was time to get in when the market was trading at 65 or 70K. So there is a sentiment overhype here right now in the short term. That said, where does this end? That's a great question. A big premise of why people are interested in Bitcoin is that it's a fixed supply, and that supply is never going to increase. As we see continued deficit spending from the world's major governments in the West, as central banks continue to flood the zone with liquidity, the rationale for holding Bitcoin, at least in theory, it's becoming stronger and stronger over time. So studies show that having some allocation to Bitcoin as part of a longer-term portfolio actually helps reduce your beta-weighted deltas and, more importantly, brings up your Sharpe ratio. So about a 3 to 4% allocation is appropriate for most longer-term investors. And quite frankly, it's been one of the best performing asset classes since the election. It's been the best since the election. So a small allocation would be doing a nice little lift here for most people. Small allocations for most individual investors is the appropriate bet for the crypto space. Obviously for traders, that's a different story, but crypto traders are a unique breed.
I see that you are bullish on an NYSE listed company, Kava, the fast casual chain. What is behind that take?
Consumers right now in the United States are actually on pretty strong footing when you look across the board. Deloitte publishes a financial confidence index, if you will, and it's sitting right now at a 4-year high. That's about income relative to savings, confidence in being able to make a next big purchase, a few other various criteria. But consumers right now have seen their savings rate go up over the past quarter. Credit card delinquencies are down. There's a high desire to spend money at levels outside in the economy, at restaurants, hotels, for travel, levels not unseen since 2021. And as we know, that was the post-pandemic breakout, escaping our homes. So the consumer right now is confident. It's particularly higher income consumers that are more confident than ever. And that in and of itself is a trend that should continue into 2025, at least the early part of 2025, The economy just has a lot of momentum right now, and it's thanks in part to the strong consumers, and that flows downhill to those retailers and restaurant companies like Cava, for example.
Chris Vecchio, great to see you and get your take. We appreciate it. He is the head of futures and Forex at Tastylive.